Imagine turning a modest $5,000 investment into $10,000 or even more. Sounds too good to be true. In today's video, we'll reveal two powerful stocks that have the potential to do just that. These aren't just any stocks. They're poised to capitalize on emerging market trends that could double your money in the coming years. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Let's start by understanding the power of investing. While $5,000 might not seem like a massive sum, with the right investment strategy and a bit of patience, it can grow exponentially. This magic happens thanks to compounding, where your earnings generate even more earnings. The longer your money is invested, the faster it grows, turning what might seem like a small investment today into a substantial sum in the future. It's why starting early is key. Time truly is one of the most powerful tools in an investor's arsenal. If you're looking to double your money and you're prepared to play the long game, we've got two stocks that might just fit the bill. These companies are well positioned in their respective markets and show promise for substantial growth. Let's take a closer look at each. First up, we have Redfin, ticker RDFN. Redfin is an innovative real estate platform that gained significant traction during the pandemic. As people moved and reassessed their living situations, Redfin's digital approach to home buying and selling was a perfect fit for the moment. The company operates differently than traditional real estate brokers by leveraging technology to provide a more streamlined, efficient process for buying and selling homes. However, like many tech-forward companies, Redfin faced challenges when the bear market took hold and interest rates soared. The rapid increase in rates dampened home buying activity, which in turn hit Redfin stock hard. But here's the interesting part. Economic conditions are shifting once again, and Redfin might be ready for a comeback. Recently, there was a significant settlement involving the National Association of Realtors that could reshape how commissions in the real estate industry work. For years, Redfin has been at the forefront of the battle against high commission fees, advocating for more affordable real estate transactions. This settlement could reduce commission costs, which aligns perfectly with Redfin's business model and could attract even more customers to its platform. Lower costs for buyers and sellers could mean more transactions and ultimately more revenue for Redfin. Moreover, Redfin stands to benefit from falling interest rates. The 30-year fixed mortgage rate has recently dropped to around 6.5%, the lowest we've seen in over a year. And with the Federal Reserve hinting at potential rate cuts in upcoming meetings, there's optimism that rates could fall even further. Lower interest rates generally mean lower monthly mortgage payments, which could spur more people to buy homes and increase the housing inventory available on the market. Many homeowners have been sitting on the sidelines, waiting for rates to drop before selling their homes. A reduction in rates could be the catalyst that brings this pent-up supply and demand to the forefront. In anticipation of a market recovery, Redfin has taken steps to streamline its operations. The company recently shut down its iBuying program, a costly initiative that didn't align with its long-term profitability goals. By focusing on its core business and digital innovations, Redfin is better positioned to capitalize on a housing market rebound. They've also made significant investments in their digital infrastructure, enhancing their self-service platform for agents, homeowners, and renters, which has started to pay dividends. These steps demonstrate Redfin's commitment to adapting to market conditions and positioning itself for future growth. Right now, Redfin is valued at about $1 billion, with a price-to-sales ratio of roughly 1. This relatively low valuation suggests that the market hasn't fully appreciated its potential for a rebound. If the housing market turns around and Redfin returns to growth, this stock could easily double from its current level. For investors with a keen eye on the real estate sector, Redfin could be a compelling opportunity. But before we proceed, here's a question for you. With interest rates on the move, do you think now is the perfect time to jump into the housing market? Or is there another storm on the horizon? Comment your thoughts below. Next, let's talk about Supermicro, ticker SMCI. Supermicro or Supermicro is a company you might not be as familiar with, but it's making waves in the technology sector, particularly in servers that power artificial intelligence, AI applications. In recent years, AI has transformed from a futuristic concept into a practical, rapidly growing industry, and Supermicro has been riding that wave of growth. The company saw its stock price soar towards the end of 2023 and into early 2024, as investors recognized its significant potential in the AI space. Supermicro specializes in providing high-performance servers that are ideal for running complex AI algorithms. As more companies invest in AI, The demand for powerful servers like those Supermicro provides has increased significantly. However, like many high-flying stocks, Supermicro experienced a pullback after a period of rapid gains. The stock surged when it was added to the S&P 500, but broader market concerns about the sustainability of the AI boom and some short-term margin pressures caused the stock to lose some of its momentum. But here's the thing. Despite these setbacks, Supermicro is still delivering impressive growth. In its most recent earnings report, Supermicro posted a 143% increase in revenue for its fiscal fourth quarter, reaching $5.3 billion. That's a huge jump, and the company isn't slowing down. For the current quarter, Supermicro is forecasting revenue growth of between 183% and 230%. On top of that, its adjusted earnings per share nearly doubled from $3.51 to $6.25 in the same period. These are not the numbers of a company in trouble. These are the numbers of a company in rapid expansion mode. So how can we make sense of all this data and decide if these stocks are right for us? Let's dive into some strategies and indicators that could help. First, let's look at moving averages. This indicator helps smooth out price data to identify the trend direction of a stock. If Redfin's price crosses above its 50-day or 200-day moving average, it could be a bullish signal indicating potential growth. Conversely, if it drops below, it might be time to be cautious. Supermicro's performance can also be tracked using these moving averages, especially after such rapid gains. Next, consider the Relative Strength Index, or RSI. This indicator measures the magnitude of recent price changes to evaluate overbought or oversold conditions. If Redfin's RSI drops below 30, it might indicate the stock is oversold and potentially undervalued, a possible buying opportunity if one believes in its recovery. Similarly, if Supermicro's RSI rises above 70, it might be overbought, suggesting a price correction could be on the horizon. Moving Average Convergence Divergence, or MACD, is another powerful tool. It shows the relationship between two moving averages of a stock's price. For example, if Supermicro's MACD line crosses above the signal line, it could indicate a bullish trend, suggesting the stock might continue its upward trajectory. Conversely, if it crosses below, it could be a signal of a bearish trend, indicating potential caution. And let's not forget Bollinger Bands, which measure market volatility. When a stock's price moves closer to the upper Bollinger Band, it could be overbought, signaling a potential pullback. If it approaches the lower band, it might be oversold, indicating a buying opportunity. By observing Redfin and Supermicro in relation to their Bollinger Bands, we can gauge whether they are at extreme price levels and identify entry or exit points based on volatility. Finally, always remember to manage risks. Using tools like volume analysis can help confirm price action. High trading volume often accompanies strong price movements, indicating significant buying or selling pressure. Market news and economic indicators are also crucial, as they can greatly influence stock prices, especially with external factors like interest rates and tech developments. Diversification is also key. Spreading investments across different assets can reduce risk and prevent a downturn in one sector from overly impacting the entire portfolio. And don't forget to use stop-loss orders to protect your investments. Setting a preset sell order if a stock drops to a certain price can help limit losses and protect gains. Looking at the table, we see two very different opportunities. Redfin, priced at $11.23 with a market cap of $1 billion, shows potential for a strong comeback if the housing market recovers, despite its negative earnings per share. On the other hand, Supermicro Computer, with a much higher current price of $547.64 and a market cap of $32 billion, reflects robust growth in the tech sector, especially with its substantial revenue and positive earnings. While Redfin may appeal to those looking for a turnaround story, Supermicro Computer might attract investors interested in capitalizing on the ongoing AI boom. Each has its unique strengths, so think about which fits your portfolio and risk tolerance better. In conclusion, both Redfin and Supermicro Computer offer unique opportunities for investors looking to double their money. Redfin is a bet on the recovery of the housing market and the ongoing shift towards more affordable real estate transactions. Supermicro, on the other hand, is a play on the explosive growth of AI and the technology needed to support it. Both stocks have their risks, of course, but with high risk comes the potential for high reward. It's important to carefully consider your investment strategy and assess whether these stocks align with your financial goals. Before we wrap up, here's something to ponder. If AI continues to reshape industries, Which stock do you think will lead the next big wave of innovation? Let us know in the comments below. Before we wrap up, remember that investing always comes with risks, and it's important to do your own research and consult with a financial advisor before making any investment decisions. We hope you found this video informative and helpful. If you did, please like this video and subscribe to our channel for more content on how to grow your wealth through smart investing. And as always, this video is for informational purposes only and should not be considered financial advice. Thank you for watching.